House prices are increasing again. What's driving this price growth in the real estate market? Today we're taking a look at a report put out by Redfin. It tracks real estate prices for the past few years and also looks at volume metrics. Starting off with this chart for median sell price, the orange line is 2023 and the red line is 2022. We can see that 2022 has been getting closer and closer to the median sell price from 2022. Many economists are expecting real estate prices to surpass the peak of last year within a few months from now. But some economists are also expecting a recession to hit the United States Q4 this year or Q1 next year. So we'll keep an eye on this real estate data to see what impact the recession has on the real estate market. But let's take a look at some additional charts to see why home prices are continuing to go up. The next chart we'll be looking at is median asking price. So the first chart we looked at was median sell price. What did the house sell for? Now we're looking at median asking price. What was the house listed at? And in this chart, we can see that 2022 prices and 2023 prices are very close. We haven't really seen a dip in listing price for 2023. This chart shows us that as of June 25th, the median asking price for houses in the US was $398,000. Let's take a look at the next chart. So this is another interesting chart looking at home buyer housing payments. Immediately, we can see that 2023 is significantly higher than 2022, and that's primarily driven by interest rates. In 2022, home buyers could still lock in a mortgage rate at 3% or 4%. In 2023, for most of the year, interest rates have been close to 6.5% or 7%. So if home prices have stayed flat for 2022 and 2023, but mortgage rates have more than doubled, it's going to significantly increase your monthly mortgage payment. On to the next chart. This chart is showing us inventory levels for the housing market, specifically new listings of homes, and we can see that it's 27% lower year over year. And it's clear that 2023 is a lot lower than it has been in previous years. So we're not getting those new listings on the market, which is the main reason why home prices are flat in many markets, if not going up. It's a basic supply and demand issue. Supply isn't there, but demand is. So home prices are stable or increasing. And one of the main reasons inventory is low is because existing homeowners are not selling their house. They're not looking to move up to that next house. Or if they have multiple houses, they're not going to consider selling that house because having that low mortgage rate is an asset. It's very valuable. It's essentially borrowing money for free. But in the more common scenario, where we have a small family looking to move up to a larger house to accommodate for the growing family, they'd rather stay put and make additions to the house or make improvements. Because if they were to sell their current house, they'd lose that low interest rate and they'd have to purchase a house with a higher interest rate, and they'd most likely get a less impressive house and pay more for that house. On to the next chart. And this is the last chart we'll take a look at. And it's very similar to the previous chart where it's looking at inventory or volume levels, but this one's looking at active listings. The previous chart that we looked at was new listings. This is active listings on the market at the moment. And again, we can see that 2023 is significantly lower than previous years. There's been an 11% decrease year over year, and this supports the fact that inventory levels, supply levels are down. Many people say there's a housing shortage, which is the case, and we can see it in these charts, and that's what's driving prices up in many markets. But again, we need to keep an eye on the data. If there is a recession around the corner, we'll see what kind of impact that has on the real estate market. So make sure you follow for more updates. Thank you.